And we're live here from South Florida. I'm here in Boca today. You probably can't understand a word I'm saying because I got my mask on. Man, this is crazy. You're supposed to wear a mask? What? I don't have to wear it in here? Oh, I thought it was mandatory. Oh, thank you. Oh my God. Oh, thank you. Whew. Down here in South Florida, they just passed mandatory mask wearing, and I wasn't aware that, with this communistic ordering that's being going on, telling us what we can and can't do, where we can and can't go, and what we can and can't wear, that I thought I had to wear the mask everywhere because it said everywhere, but I guess it's only when you go out the house. What a huge crock. I mean, there's nothing more I can say about that. I've been covering this data with you on a daily basis, and looks as though the state's dashboard is down a bit today, but it's got the most important data, that's for sure. So as you can see, looks like a lot of their cumulative data is not in place. It's not being input or whatever, or not showing, not fully configured, whatever that means. But the most important data, the data that we actually have to care about, is over here. And yesterday we saw, it looks like 3,900 cases. Oh my God, cases! But down here below my head, we had 10 people die. 10 people in a state of 21 million. I'm over it. I am so over all this crap that we're seeing, and people just freaking out, and they're going to freak out some more with what I got to show them today. They're probably going to start really freaking out, and I'm smiling because it's a good thing. It's bad for some people. It really is going to be bad, but it's going to be one of the best money-making opportunities that you could imagine right now. While we're in the middle of this corona, while we're seeing so much doom and despair from people, and nobody seems to want to understand how this makes absolutely no sense. Does it make sense to you? I mean, seriously, does this make sense to you that people would be freaking out over the fact that, yes, there are some people who are dying, and it's unfortunate these people are dying, but for the most part, in a state of 21 million people, are we really going to freak out over 10 people dying? Seriously, think about that. Are we going to freak out over 10 people dying? Now, I understand if that was my mom, if that was my dad, if that was someone that was close to me, yeah, I would be upset that they're looking to succumb. But when you really look at these numbers and see what is going on, do you think we need to completely freak out over this? Or is this something that we can basically go on with our lives, be smart? You don't need the masks. The masks are completely crazy. Here's what's going to happen. People are going to claim religious exception. They're going to claim medical exception, and it's going to cause a whole bunch of problems. So that being said, it's time to get ready to make some money in real estate. And I've played this, or showed it rather, a number of times. And it's from our pal Warren Buffett. And it says, I will tell you how to become rich. Be fearful when others are greedy. Be greedy when others are fearful. The other after that is from Baron Rothschild, who said, time to buy is when blood is running through the streets. Not literally blood, but panic, hysteria, pandemonium, all that stuff. When people are just losing it, now is the time to be buying. And we're getting back into it, as I showed you in the video yesterday. We're starting to buy a lot. It's going to be a supermarket of choice here. So bear with me. I've got some data for you. So back in early April, saw this story pop up, and it says, here comes, and this was April 3rd. We weren't quite into the craziness of how far this was going to stretch. But the biggest problem people and economists saw was up to 30% of all mortgages will default. So at that time, this was merely a projection. People who dig into numbers, who get paid to watch trends, sort of like this Corona thing, said, hey man, I think we're going to see something really bad happen here. I think we're going to see as high as 30% of all mortgages going into default. They said it on April 3rd. Then on April 8th, this happened. And what I can blow this up for you, what happened was literally 5 days later, just 5 days later, stat comes out that Americans not making their mortgage payments soar by almost 1,100% in 1 month. It's trended just in 5 days, went from 30% of people being delinquent to 1,100% rise in people not making any mortgage payment that for April. Those of us who look to buy property just go, maybe we better get ready for this. Maybe blood is running through the street. Maybe, as Warren said, we need to watch what's going on, that there's a lot of fear out there. Get your ducks in a row. Time to start buying. You guys wondering why the stock market seems to go up even in the midst of problems? Could this be it? Could people who are in the know actually be saying, hey man, this is a time for us to begin looking at investing? So here's something else I want to show you. This is, and I'm going to blow this up, this is the stock market, with everything being bad. And so today we're up 131, but I want to go back here and look at the last 6 months. You see that? You see, this is when everything with the Corona hit. March 23rd, we hit basically bottom at that point. And on March 23rd, everybody began that fear mode, that panic mode, and dumped everything. But you see where the trend line is going? It popped up to 27,000 on June 5th. It dipped, but it's still chugging up. If you understand trend lines, and I try to tell people, if you can draw a line from the highest point to the lowest point and it's still going up, then that's something that you're going to want to take a look at and understand that trajectory means something. It's not coming back down. It's continual to go back up. Now there's going to be some dips, and you always buy the dip. That's a different show. But we're seeing the real estate market begin to reflect that people who know, people who actually understand where the data is heading, are beginning to position themselves to buy. Just saying. I've been called a bottom feeder for 15, 20 years. It's not bottom feeding. This is a commodity. You buy low and you sell high. That's how you make money. It's merely a commodity. The house is no different than this pair of glasses to me. I buy it at the store, and then at that point, whoever sold it to me, they made some money, hopefully, and there's no emotion to it. The story with the home, and notice I say property and house. I don't use the word home too much because I'm not looking at taking or buying people's homes. That's not me. You come to me when you're ready to sell an asset. I work a deal with you when you're ready to sell an asset. I will buy an asset and we can basically trade it like a piece of stock. So we saw this, that 1,100 people didn't make their mortgage payments in April. Now, this comes out yesterday, and it says 30% of Americans didn't make their housing payment in June. Go back to the first one. Hear what he said in April. In April, he said the next crisis, up to 30% of all mortgages will default in the biggest wave of delinquencies in history. I've talked about a crystal ball the last couple of weeks, how no one in real estate really had a crystal ball. Well, these economists did, and it sure enough paid off like a lottery ticket today. 30% of Americans did not make their mortgage payments in June. 30% of people who hold mortgages on single-family homes did not make their mortgage payments in June. That is absolutely huge. I mean, the market is about to just go bonkers. And I talked to you yesterday about it being a buyer's market. So check this out. This came out a few days ago. Nearly half of Americans, I won't say Americans, nearly half of homeowners are considering selling the home, I would say house, as COVID is crushing their finances. 50% of people who own a property are looking to sell it. They're considering selling it. That's foretelling where things are going. If you think the market's bad now, and you get a glut of people who own property who are either laid off on unemployment, forget the renters. That's just a completely disaster that's about to happen. But if truly 50% of people are looking to dump their properties because their finances are crushed, can you imagine what that's going to do to the real estate market? I'm sorry, I shouldn't smile. I buy non-performing assets. I buy properties that are delinquent, because the one thing that's positive about real estate, the one absolute, is there ain't making any more of it. And, well, let me talk to you about that too. They ain't making any more of it though. And so what ends up happening is that real estate always comes back. It always rebounds. All these people who are going to be displaced from their rental properties are going to need some place to live. Who's going to take a shot at them and let them move in after they just got tossed out of a place? And even though it's a COVID and there's a big asterisk and that you shouldn't really, there's no reason to blame these people. The Rona basically put them in trouble. These are good people in bad situations. But again, this is hard fact. This is just data. These are numbers. And there are going to be some people who are going to be really leery about taking a chance with a new renter. So the opportunity that you see is if you can buy a home, if you buy a house, if you buy an asset at a good enough price, you're going to be in a position to help some of these good people in bad situations. As they begin making money again, you're going to be able to put them into properties, get the rate of return that you're looking for, and it's going to be thousands of people here in South Florida looking for new places to live. Thousands. That's not even including the wave of foreclosures that are about to happen as a result of this. And it goes to, this was today. Mortgage delinquencies surged to a 9-year high. And this first sentence says it all. You got to read this sentence with me. The worst has yet to come for the real estate market as home mortgage delinquencies surge to the highest level in 9 years as the virus-induced economic downturn continues to crush household finances. We haven't even hit bottom yet. And those 50% of homeowners looking to possibly get out of their properties if they can't afford it, we're seeing mortgage delinquencies in their highest since in 9 years. So we're going to go back to 2011, 2010, and we're going to be looking at that level of foreclosures. Katie, bar the door. I mean, it's about to just get nuts out here. If you got some money behind you, wink, wink, come on, guys. You want to park some money down here in South Florida, you know how to get a hold of me. Oh, by the way, my name is Barry Cunningham, and I am a real estate investor with 20 years plus experience in buying and selling real estate. And I sat out the market while it was going crazy, and now is the time for us to jump back in. So get a hold of me if you want to look at doing some deals. But as you can see, these people are going to be in a tremendous hardship. I mean, 4.3 million people in May are now delinquent on their mortgages. And the report said those who qualified for forbearance made payments early in the pandemic. However, now the percentage is much lower. Okay, so a forbearance meaning, hey, listen, Mr. Bank, I don't know what to do. This virus thing is going crazy, and I've been booted out of my job. I'm home. I'm trying to wait for this stimulus. I'm trying to wait for the government money. Can we do something? Can I put my payments on the end of the loan and then start paying again in June? Okay, well, I can do that for you. And then June came. And then June showed up. And then June showed up, and people aren't making their payments. People still are on the sideline. People still are being destroyed by this corona stuff. As I take a drink here. It's amazing. It's amazing. So, again, this is textbook Warren Buffett. Be greedy when others are fearful. People are terrified right now. You got the whole mask thing going on, which is intensifying the fear. You've got people not paying their mortgages. We're seeing articles more and more where this kind of stuff is showing to us. Home sales are abysmal in May across South Florida. As I showed you some of the numbers yesterday, down 40-50% in sales, and we're just seeing the foreclosures haven't even hit yet. Think about that for a second. Think about that. So if we're already seeing a dip of 40-50% off normal sales activity in South Florida, and 50% of people who are homeowners are looking to sell or considering sell, and then another 30-40% haven't paid their mortgages and are going to be delinquent or are delinquent. So what happens when you have a lot more inventory and you don't have near as much demand? I mean, that's basically Economics 101. Any of you guys who've gone to Economics 101 in college, you're going to know if you've got a whole bunch of inventory and not as many buyers, not as many customers, which way does the price go? Price goes down. It's inevitable. People are afraid. It's time to be greedy. It's time to be cocky. Time to walk into real estate agents' offices and going, I'm buying. I'm going to use that video tomorrow with Eddie Murphy and Dan Aykroyd in Trading Places, because right now we are in the middle. I won't say the middle. We are in the beginning of the Trading Places movie. People are starting to feel that twinge, like, oh my God, what am I going to do? What am I going to do? I'm not really working. I can't pay my mortgage. Bank's like, hey, I feel for you. But, I haven't heard of any stimulus plan to tell the bank, say, listen, let Mr. Smith go and we'll go ahead and reimburse you. Haven't heard that plan. On July 2nd, which is basically 10 days from now, I don't know if DeSantis is going to extend this eviction moratorium another month or so. If not, wait till you see what hits the courts on July 3rd, 5th, 6th, 7th. It's going to be carnage. People are going to be freaking out, which means the opportunity to make money is huge right now in real estate. And, I didn't say this. I wish I had, but I'm going to keep showing it to you because it says be greedy when others are fearful. This guy has traded for years. He has made a ton of money. What he says was basically the model for the E.F. Hutton commercials. Oh, and let's discuss what we haven't even brought up yet. These people just getting out of New York City. I talked to some guy today who left his furniture, just took his wife and 2 kids, got on an airplane, came down here, rented a hotel. I need a place to live. What are you going to do about your apartment back in New York? I'll work on that later. Right now I need to, get some place to live. I already opened up a bank account down here. I need a place to live here. I'll worry about New York later. Man, it's going to be a gold rush. Gold rush is on. It is. And then we see, home sales abysmal. You think it's going to get better in July? You think the numbers for June are going to be better? Of course not. So you need to have your positioning, you understand your marketing, put yourself in a position where you can begin buying these properties, or at least contacting the owners and agent and let them know you're in the market. A lot of them aren't going to want to take your offer first off because your offer is going to be probably 30-40% less than what they're asking for. But it's okay. Okay, Jane, I know you understand. You're asking $400 for this house, and I offered you $250, and you're insulted. But do me a favor. Hold on to my number. Hold on to my website. Hold on to my email. Contact me in July, maybe mid-July, maybe end of July, when you see what's happening. When all the other people aren't buying, when no one's showing up at your open houses, give me a call. I'm still here. Hopefully the price I can still offer you is the same, but I'll be here. I can be your last resort. I don't mind. But don't wait too long, because if this slide continues, that $250 I offered you on that $400,000 house is going to look like a pipe dream. I'm going to go, whoa, I don't know if I can do that right now. I'm going to have to get down to 190, and you're going to scream at me. But if what we see is happening, and we're seeing all this kind of stuff, and we're seeing mortgage delinquencies surge to 9-year high. Let me ask you guys a question. I used to talk to people when I was teaching short sale classes, and I used to talk to them about a regression analysis. And yesterday I talked to you about absorption rate. Today I'm talking to you about a regression analysis. It's another term you don't hear many people use. But basically, most realtors and homeowners price their property based upon what the other properties listed around them are going for. A lot of them don't even use sales comps. They'll just do listing prices, which is another game. And then they chase the market down. I love that term, chasing the market down. When you're charging or listing your price property here, and you've got to keep stepping it down because the market around you is going down, now step in and do a regression analysis. Find out how many properties in a mile proximity of your subdivision are in foreclosure. What do you think is going to happen to the value of your property then? Well, I'm telling you right now, if we're seeing this, if we're seeing mortgage delinquencies hitting 9-year high, you may want to start getting out some sort of diagram and start charting the properties around yours that are in foreclosure, and then you're going to be able to see very quickly how fast the value of your home is going to go down. Don't worry about Zillow. That's bullshit. Oops, sorry about that. If your house is here and here, and here are foreclosure, and these people are going to be dumping their property so they don't lose their shirt, what do you think is going to happen to the value of your property? Scary, huh? It's an actual scary thing to think about, isn't it? It's extremely scary. You're afraid. You have a lot of fear. Yeah, that's what I'm talking about. People are going to be afraid. They're stuck wearing these masks everywhere. That's just the least of their concerns. Once they see this, once they see what's coming, it's going to be an amazing turn of events that is going to be terrifying for some people, but for others, it's a huge money-making opportunity. But before I go, and I don't want to close, we've talked about the Rona, we've talked about all these properties, basically pooping the bed, and banks not being able to do it, and mortgage delinquencies at a 9-year high. There is some good news. There is some good news in real estate. And basically it's the rich get richer, the rich get better. And it was this one. New home sales surged 16%, smashing expectations. New home sales. In other words, people with money building their own new home. Those things are still moving up. That's why when I say I want to do some development, that's why I also want to be knee-deep in development in South Florida, because the people with money don't have to worry about mortgage delinquencies and short sales. If they can find land, they're going to build their own property. If they can find something that's in a good neighborhood and has a decent location, they're going to buy it, tear down, and build up a new house. When I was in Fort Lauderdale and we were in the Coral Ridge area, it seemed like it was McMansion heaven. People were just buying property, spending $600,000-$700,000 on a property and tearing it down. $600,000-$700,000 on a nice house, tearing it down and putting up a 4,000 square foot home on the intercoastal. That's where the big money is. I see that happening again. So now we have another opportunity is to start scouting out tear down possibilities in neighborhoods. When these people from New York come down who are used to paying a lot of money, who've got cash, and you tell them, hey, listen, you're going to be able to put a 4,000 square foot house here. It's going to be worth about $6-7 million. You're going to have 90 feet of dock space out here, but you're going to have to tear out this home that's in the way. And these people want $600,000-$750,000 for you to buy their home, and you're going to have to pay it. And a lot of people will say, do it. Take that home, tear it down. Let's go ahead and build up our McMansion here and put up our $6-7 million house. Happens all the time. That's where this market is turning. This market is going from people who can't afford their homes, who have no idea what's coming in terms of where this corona is. And then on the other end of the spectrum, you've got people who can afford to build their own dream houses and take advantage of the market, especially as prices go low. If you don't take anything away from today's show, take this away. Try not to be emotional about this. Try to understand that real estate is a commodity. It's like a piece of wood, some concrete, some dirt. And while these other people are being extremely, extremely fearful, it's time to belly up and get as greedy as you can be, because this is the time when multi-millionaires are made. This is a time when people start seeing 16, 20, 30% more return on their investments if they put it into either single family homes or they just go ahead and lend money out at 15, 16% and get 3 points on it. There's all kinds of ways to make money in this market. This is the kind of market that you dream of when you're on this side of the table as a real estate investor. So I hope, I've given you some information to run with. I've committed to doing this show, but I'm telling you right now, it's going to be a whole lot of work to do because, hey, we're going to be looking at some property. And I'll wear my mask when I'm out there and smile underneath it. You guys have a good evening and start looking at some deals. They're out there.